Hey everyone, welcome to High School Dropout's Advice. Today we are talking about a stock that focuses on plant-based food. We all know that we have to eat more healthy, and plant-based meat, vegan and vegetarian dishes become more and more popular. It's also no secret that frozen food is on the rise, especially after and during the pandemic. We just had the Q4 earning release on the 10th of March and we are talking about TTCF, which trades under TTCF. We have a 1.7 billion market cap with 81.4 million in share, as you can see right here. Before we dive deeper into the company, checking its fundamentals and then decide if this company is a buy, I would like to ask you to please subscribe to my channel. Videos like this take a long time in research, scripting, shooting and editing. TTCF is a very vertically integrated company, which means planting and farming their own ingredients. Then they produce and cook the meals and ship them to the retail stores. According to their source, most of their ingredients are planted and farmed in Italy. They offer single-serve bowls, smoothie bowls, veggie blends, meat alternatives and pizzas. Let me show you their website so you can get the feeling of their selection. The exciting thing about this company is that they just started not long ago and many new products and dishes are coming every year. They will launch another 6 products on the 15th of March. They need around 3 months from designing a dish to having them in the retail store's freezer. This is a very quick in comparison to other frozen food suppliers. This is possible because the start to end is managed in-house in California and Italy's 2 facilities. Let me show you how quickly they had expanded their products. In 2018 they had 9 products, in 2019 they had 21 products, in 2021 they want to have 62 products with an increase of 24 products in this year alone. Their products' big channels are Walmart, Sam's Club, Target, Kroger, Publix and Albertson. So most of the grocery stores in the United States will have TTCF products. TTCF has over 23,000 points of distribution, which should increase to 65,000 this year. This means more stores will offer their products in 2021. So we can expect a big boost in revenue here. I also want to show you that the new SKUs, in other words, new products, will generate an increase in revenue because once the brand is known, loyal customers are likely to try the new dishes. Now that we know what the company is doing, let me show you the fundamentals which were released on the 10th of March. Let's compare quarter over quarter first. We see a revenue of 39.6 million, which is an increase of 48% compared to 26.8 million in the prior year period. But I want you to see this. TTCF branded product revenue was a record 23.9 million, an increase of 172% compared to the 8.8 million in the prior year. So why is this number so important? Let me explain this part to you. You might know that Walmart and every other grocery store got their in-house brand, and many food production companies will sell their product with the grocery brand. Usually the in-house brand is more affordable than the actual brand. But we see that the product, which is branded TTCF, got a revenue increase of 172% compared to the 48% in product sales. This is a very good sign. This means that the customers are willing to pay more for their branded product, and it also means that customers are returning and willing to spend more. We know that vegan, vegetarian and plant-based dishes are usually pricier, but people who want to live healthier are usually more willing to spend more money on healthier food. The net income was 41.5 million compared to the last prior year period of 2.2 million. This is however a little bit misleading because they had a 39.3 million tax benefit. They could increase their EBITDA, which stands for earning before interest, taxes, depreciation and amortization from 2.2 million, which equals 8% of revenue, to 3.7 million, which is 9% of the revenue. Let's have a full year comparison now. 148 million compared to 84.9 million, which is an increase of 75%. Then we have an increase of 363% of their branded products, which increases from 18.3 million to 84.6 million. This is a number I care most about, because this is a strong sign that customers are coming back and love the brand. The net income was 45.4 million for the whole year, and if we deduct the tax benefit, we will get a profit of around 6.1 million, a slight increase of 5.6 million the prior year. So there's not much doubt that this company is growing and got good fundamentals. Let's have a quick look at their outlook for 2021. Tattooed Chef is expecting a growth of 49% with a revenue of 222 million. They expect their gross margin to increase, but on the other hand, they expect their EBITDA to stay pretty much the same as 2020, and also their income of 2.5 to 5 million is actually below their current earnings. So let me tell you why they have this outlook. The current sales numbers are generated without any cost in marketing, so all the growth was organic. They want to launch more marketing to speed up their growth for this year, but of course it will cut into their profit. Let me show you one more thing. They are holding around 131 million in cash and have receivable around 33 millions. So this company has enough cash for its size to focus on growth before focusing on profits. Let us evaluate the company now and compare it with one of their competitors. Beyond Meat has a net revenue of 4.6 million in 2020, and we have to mention that Beyond Meat is not profitable yet. We have a 9 billion market cap for Beyond Meat. This means that it trades for 22.12 of its earning. If we translate this one-to-one to Tattooed Chef, this would be 22.12 times 148.5 million, which would be a market cap of 3.28 billion. You might remember, we are trading at a market cap of 1.7 at the time. So we can see an upside potential of around 92% here. This means we could nearly double our investment in the short term. So in my opinion, we got a fundamentally strong company with great growth potential, which is compared to Beyond Meat, attractive evaluated for a long-term buy. It also generates profit, which Beyond Meat and Impossible Foods are not. But please understand, Beyond Meat and Impossible Foods are together like 7 to 8 times bigger than Tattooed Chef. So we need to see Tattooed Chef getting more of their market shares. The profit in my eyes is secondary here. It will be a long-term game, and the market shares and the total revenue matter more than the profitability at the moment. Anyway, for legal reason, I have to say I'm not a financial advisor, so remember, your money is your responsibility. I'm just a guy on YouTube. Please do your own due diligence and try to make the wisest move. Don't forget to share, like and subscribe. Many thanks. See you hopefully in the next video. Thank you. Bye.